when you withdraw your stablecoin, the Vault token is burned and you receive the deposit stablecoin back. So that's in summary. But what are some of the benefits of using inverse finance over manually selling yields? So that's a really interesting question. We're going to get into that straight away. But before we continue, allow me to declare that this video is not financial advice. It's strictly for educational purposes. Now, the current price per token for inverse finance token is $375. So that's quite significant. And if we go to CoinMarketCap, it is fluctuating quite heavily. It's around 370 at the moment. But like I said, it is quite volatile. So it is fluctuating a lot. Now, recently, it actually went up to as high as over $600 per coin. And the reason for this, everyone will be wondering, why is the price going up so much? Why is it so volatile? Well, that's because the circulating supply is extremely low. Only 85,000 in circulating supply, and the max supply sits at 100,000 coins. So that's quite significant. This is with a 31 million market cap. This ranks at 616 in the world of all cryptos. So this is quite interesting. In the last 24 hours, it's been down almost 12%. And like I said, it is fluctuating quite a lot. So it probably been down a bit lower than that, but we wouldn't really know right now. It's not really important anyway. The point is, it's quite volatile. What we really want to understand is if there's any good use cases for this token. Because given its low supply, it's always going to be quite volatile. Even if you look at the history, it wasn't too long ago, almost 2.5 months ago, the price was just above $800 per coin. That was insane. And if you go back further, you'll realize that it's actually been above $1,000, $1,451. It's been at some crazy high points throughout its history, throughout the last year, throughout the last 3 months. It's been quite volatile. But at some of its lowest point, especially in the last month, it's been as low as $222. And to be honest, don't expect this crypto to be low for too long because there's an insane low supply. Given that the supply is so low, people will always invest just to wait a little bit so the price goes up and sell as soon as possible. So for a lot of people, they're using this to trade. They're making a lot of money in that regard. But long term, we have to assess if this is actually something that people will want to invest in long term. That's the real question. So let's continue with our assessment. So what are the benefits? Well, the first benefit is gas fees saving since the vault converts all user yields at the same price instead of 1 transactions per user. The second benefit is that it allows you to follow a dollar cost average investment strategy in a target price. Using your stablecoins yields over a long period of time, this may be a suitable strategy for those who are not willing to take the risk of market buying the target token directly and would prefer to keep their principles protected from volatility. Boy, oh boy, is there a lot of volatility in the market right now. There really is. So now that you have a proper understanding of inverse finance, it's time that we do a